stocks clearly are trying to make a statement, right, that they want to go higher. Do you believe in it?
We're getting some momentum, Scott, and it's not altogether surprising. You're continuing to see this better than we feared earnings season, and I think that's continuing to buoy stocks. And the other thing to think about in terms of believing in the rally is just this expectation that is a potential contraction later in the year priced into stocks. And if that is so, then you could see a sustained rally here over the next couple of weeks. However, I caution that I think it's probably a little bit too far too fast. I think we're benefiting, frankly, from being immersed in earnings season. And I think as we start to enter into the last couple of weeks of earnings season, the emphasis is going to go back to the macro. It's going to go back to the Fed. And clearly, we know that they're trying to make sure that inflation is anchored before they become accommodative. So I think we should enjoy this right now. I think investors should be looking at this as an opportunity to potentially reposition, particularly from a valuation perspective. But I don't know that we could say for sure, just given the headwinds we have in the couple of Fed meetings that we have coming up, that we're in an all clear scenario.
I got you. What a difference, though, if a couple of weeks or a few reports makes. To hear Shannon say we're benefiting from being in earnings season when we were worried about what earnings season was going to bring, Malcolm, that was going to be the tipping point for whatever kind of early year rally had gotten started. Earnings were going to upset that. Not so far.
Well, we did expect a lot more choppiness is the word I would use. The markets do seem to have a bit more of a upward bias, I guess, as you guys are talking about through earnings season so far. But I would just point out the fact that we're probably only 25% or so through all the S&P companies. And so maybe it's a little bit too soon to be patting ourselves on the back and popping the champagne here. But I definitely do think that we've seen a better market reaction a little bit earlier in the year than those of us who expected a rally in the first half were predicting. I myself thought we'd at least get on the other side of earnings season and at least get one Fed meeting out of Powell in February before the markets decided to start churning higher.
I mean, your point is well taken, but I'll just come back to you. Are any of the big tech companies next week going to tell us something we don't already know? Like, where's the great surprise going to come from, right? They're concerned about the macro. We've heard it from CEOs already. We're downsizing our workforce. We've heard that already. What could they possibly say at this point that's going to be a giant surprise?
Yeah, I would agree. I think the story in the tech sector is a little bit old now, and nobody's really looking to them for guidance on where the economy is. I would say, though, a little bit different to that point. I would be concerned if I started to hear other industries, non-tech, non-healthcare, non-financial start to announce massive layoffs the same way that the tech sector has, simply because that could mean that there's a bit more contagion there and a bit more softness in the labor market that you guys were just talking about is the thing that's making this particular market cycle so unique. We may not have to have a recession because the labor force is so strong right now, but if we started to get layoffs from any of those other sectors that aren't easily replaceable, easily hireable, and they're walking out of the door with generous severance packages, then I think we're coming back to this conversation and saying we've got to reassess.